Ladies and gentlemen, I would like to take the time to thank you for taking your time out to check out the Blkshire Hathaway course part 2. This one is RSI made easy. I know what you're thinking. Kent, what in the world is RSI? Don't worry. Your boy Kent King, aka DJ Dark Kent, I got you covered. I'm going to break this down for you. Just do me a favor. Remember, none of this is actually financial advice. It's just some things that I learned that I like to share in my community. So, let's get into it. RSI made easy, the Blkshire Hathaway course part 2. Now, the definition of RSI, when you break it down, it stands for Relative Strength Index. Again, Relative Strength Index. This is telling you how strong the movement of a stock is in relation to itself. So this index is studying the stock's movement over a specific period and telling you just about how strong that movement is going to be as far as continuation. Will this continue to go up or will it start to go down? That's what your RSI is actually going to tell you. Now, what you want to know is that this is an indicator. It studies momentum, how fast, how sudden, how soon something is going to move. Very important. Now, this will also let you know when a stock is either overbought or oversold. If a stock is being overbought, a lot of people are buying it. Guess what? They're going to want to start taking some profits, and they're going to end up selling it. If it's been oversold, people are going to look at that stock as a buying opportunity, meaning it's probably going to end up going up. Now, this meter to me determines when a stock is either hot or cold. This is my hot or cold meter. Now, again, RSI, Relative Strength Index, this is looking at a stock over a certain period of time. You can change that period. You can change the interval for how long you're looking at the momentum, right? Most commonly, you're using a 14-day period. What this stock has been doing for the last 2 weeks of trading. The last 2 weeks of trading. Not just 14 days period, but the actual trading days. So, an RSI indicator of 70 typically means that the stock is being overbought. That's the signal that you want to look at to see if a stock is hot. When it's at 70 or above, that means it's overbought. When it's at 30 or below, that means it's being oversold. So 70 and above, you can typically assume that the stock is going to eventually start sliding back down. Now, I'll show you guys some examples of this next. We'll go over to the computer, and I'll actually break this down for you and show you some charts. But I really want everyone to understand the terminology behind this momentum indicator, RSI. And again, an RSI of 30 is going to indicate that a stock is oversold or it's cold. Basically means there's buying opportunity there. People are going to probably start buying this stock because they see that it has the potential to go up. One of the key and crucial facts that you need to know, the entire RSI scale goes from 0 to 100. So that means you can have an RSI that's above 70 or below 30. And that's what we'll get into next, the true or false of RSI. Now, it can produce false positives or false negatives, meaning you can see a stock that maybe is above 70 on the RSI, and you'll look at it and say, oh, it's about to start coming down, and it might start sliding down, but then out of nowhere it may go back up, or the price may stay the same. You don't know. That's called a false negative. You thought it was going to go down, but it didn't. And the opposite is true for a false positive. When it's under 30, you're thinking, hey, everybody's about to start buying this stock, let me see what's going to happen, and boom, not what you expected. That's the false positive. The one thing that you need to know is that this indicator is actually meant to be used in combination with other indicators, which of course we will break down later on in the Blkshire Hathaway course. But I wanted to start here with educating everyone on what RSI is, because this is the most basic indicator that we could possibly start with. It's the easiest one to know, and it's a very true indicator as far as what the stock is doing. So one thing you need to remember is that overbought or oversold, those numbers can actually vary depending on whether or not the stock is in a bullish or bearish diversion. What I mean by that is if you have a stock that's maybe in a tech sector, you might see it ride above 70 for quite some time because the entire tech sector is just hot. Everybody's buying something in tech. So sometimes you'll look at an RSI on a stock and be like, wow, this thing's been riding at 80 for a couple days now. That means the entire sector is hot. And of course, there's truth for the opposite as well. Now, something can actually stay overbought or oversold for longer than you expect, meaning some of these RSIs may ride out days, and you might say, wow, this thing's been hot or cold for days, didn't expect that to happen. So the number one thing that you want to do is pay attention to RSI indicators, start studying the market, and utilize this in your bag of tricks to actually have some knowledge about what it is that's going on with the market. Again, we're going to jump from here. I'm going to take you guys to my computer and I'm going to show you actually how to use this on a stock chart and what it looks like. All right, let's jump right into Robinhood, right? I know a lot of people are still trading on Robinhood. We're going to talk about some alternatives to Robinhood, but if you are trading on Robinhood, what I want you to do is go ahead and go get the desktop version or just go online and pay attention to your charts. So now once you jump into your charts, right, you hit the expand button. So let's just go back just so you can see exactly what this looks like. So I'm looking at a stock called GoGo right now. They provide internet service for airline companies. I've been in this stock since it was about $8 post-pandemic, right? I got into this after the pandemic hit. So yeah, I got in here when it was around $7 or $8, maybe $6, I can't remember. But you go ahead, you hit your expand button, then you're over here and you can see some charts. So now we only see one graph, which is pretty much telling us the price. When we want to add some data, we hit this button right here. Boom, add data. You slide down to relative strength index. Now, again, you want to make sure that your RSI is at 14. Now, if it's not at 14 when you automatically hit it, just go ahead, hit this little settings button, and then you can change the color. You can change the period. You can change the overbought and the oversold levels so that you can actually pay attention to whatever index in the way that you like it set up. Again, for me, I like mine set up, and this is how most people have it set up, 14, 70, 30. So now that you've got that, let's go back and take a look at the stock. Now, here's a very important part. You want to make sure you have your dates set up for both either 1 month or 3 month. That's the intervals that you want to be looking at. Either a 1 month or a 3 month interval. This will give you the best view of your data. Anything else will either be too short or too long if you have it on a 14-day period. So again, if your RSI is set to a 14-day interval, you want to be looking at the 1 month or maybe the 3 month chart. Now we've got it on set to the 1 month here. So let's go back and take a look at September 17th. The RSI was at 69, right? So we know at 70, that's when we start to see, we can expect for it to start to come down. People are going to start selling. So let's just see what happens. It was at 69 and they went ahead, started selling. The RSI was slipping down lower, got all the way to 53, the RSI did, and we got a false positive. Look at the price. It ended up jumping back up. So it went, the RSI was at 53 as it was going down. The price went from 1012 to 1033. That's what's called the false positive because it ended up sliding right back down to $9. Now, on the RSI, we were closer to 30. We're at 37. We're moving down. Look, now we're under the 30. And guess what we got? Another little pop there. We're at 22 on the RSI, and we continue to go down. Now, here's the thing. When you're in under 30, when your RSI is under 30, that's what's called buying opportunity. That's the area where you want to be looking to say, okay, now what is the best price to get in at? I know for a fact that this RSI is under 30, so eventually it's probably going to end up popping. I don't know when, and I don't know what number to buy in at. Those are other indicators. Again, this is showing you the momentum. So we're going to focus on this for right now. We'll take it somewhere on the next one for you to actually know the entry number. So back to the RSI, we're still under 30. So the entry level is still a decent number. Now, here's the thing, right? As long as we're under 30, the price is still going to be around $9. It's going to change in cents. But let's just go ahead and look at what happened right here. Now, the price was $8.69. Great buying opportunity, especially because today we're at $11. So the RSI was at 23. Now, let's just see. The lowest that the RSI had been before was 22. Once we hit this 23 number, though, it was a great buying opportunity because it started to ride right back up. Now, again, we're looking at the price, right? So it went right back up. RSI was around 30, 40, kept hovering there. The RSI still at around 30, 40. We're hovering there. RSI broke the 50, right? And it's going up.
going up, going up. Now let's look right here. We're about to have a nice little run up. When we get all the way to, let's say, $9.83, your RSI is at 62, getting a little hot there. Doesn't mean you need to pull a ripcord. Just be expected to know what is about to happen. And look at this. Your price slid all the way back down to 911. Once it got back down to 911, it broke out again. Went on the way up. RSI still not touching that 70 up. We touched the 70 here and we got a false negative. Jumped down. The RSI still actually was at 74. The RSI jumped down to 70. The price jumped down a little bit, but that was a false negative. Look, your RSI is still hot for these, what was that, 2 days? Yeah. From the 5th to the 6th, your RSI was still running hot. Now, again, we said sometimes your RSI can have a decent run. If it's hot because of the sector or what's going on in the sector, it might have a little bit more time as far as before the price changes. So sometimes your numbers can run that hot for a little period, 1, 2, 3 days, depending on what the stock is doing and what that sector is doing. So now let's go ahead and take a look at this peak right here. Your peak price 1083, your RSI is at 71. Once it's at 71, we can expect a potential downslope, and that's exactly what we got right here. Nice little downslope. It came down all the way down to 1003. Same thing, peaks and valleys. Let's go ahead and look at the next high peak, right? It hit $11 and your RSI was at 80. So we had to know that what was going to happen. We saw that peak way above 70. It's going to start to slide back down. RSI slid all the way down, still didn't even slide down under 30. But let's just go ahead and take a look at where we are right now. Your RSI is at 71.50. Price is at 11.15. We can expect that this stock is probably going to slide down within the next few days. It might come in a little hotter. You might see the RSI ride all the way up to maybe 80, maybe even 90, depending on the beginning of the week that we have. However, you can expect that this is going to start to come down pretty soon, which creates more buying opportunity if you believe in this stock. So again, I hope that this explains some things. Drop a comment. Let me know what you think. If I need to break anything down, I'm here to do it. And again, this is the Blkshire Hathaway course. This is RSI Made Easy. I hope that this helps.